Hey, good morning, guys. It's Jamie. It is November 2nd, 2022. This is the Thanksgiving month. And today I just wanted to talk about some strategies that I'm doing. And I hope it'll help you, just as a comparison to what you're doing, just like if we were just talking about what you got going on. I know that, I believe it's today, the Fed is going to have another meeting and they're going to talk about rates and stuff. I don't know what you think. It's possible they could go up 25 basis points. It's possible they could go up 75 basis points. Who knows, right? Exactly. But we'll find out. And then the employment rate was still pretty good. So chances are it'll probably be, I'm going to say 50 to 75 basis points. So it continues to go up, and it'll affect the market. This month is my oldest daughter's birthday. She'll be 10. And Mason, my oldest son, will be coming home to visit from the Army for Thanksgiving. So we should all be together, all the kids, and having some family time. So I'm looking forward to that. That is really the thing I'm most looking forward to, not the tax rate hikes or earnings reports or any of that kind of stuff. So as I invest and I look at investment, I want to pose a question or a thought to consider. So wherever you live, if you happen, the majority of people own a house. A lot of people that do own a primary residence and they live there. Whether it is a duplex, a multifamily, a single family, whatever that looks like for you, and you have to pay, if you don't own it outright, you have to pay a mortgage. Now, if you pay a mortgage, then it's a liability, meaning your mortgage is $500 a month, $5,000 a month, $10,000, whatever that mortgage is, and whatever your income is, you're like, okay, I make enough to pay the bank that mortgage. They gave me the $100,000, the million, the $5 million to buy this house. Having known what I know now, I would do things differently. But if you do own the house, like the majority of people that do own a house as a primary residence, if the market pulls back, which it already the housing market, which it already has begun to do so. I see it because I get alerts on properties I've been watching that there's price decreases, and some of these price decreases are quite substantial. And in my own house, I not only on like Realtor or Zillow or Redfin or wherever you might look, I see a fluctuation, but I had I had a realtor tell me what they thought, some months ago, and what they thought now as I considered, do I flip this property that I have now when the market was still good? Or do I just sell it now and reinvest that money into other possible, properties? Okay. And I don't think I would sell this specific property because of a lot of reasons, right? Like one of them is the rates are so low. 2.8% is what we had. It's a good area. It's grown. It's like the market value is going up. There's a lot of reasons why I think we should keep this property and eventually just rent the whole property out. But it has decreased just in that short amount of time frame, let's say 6 months, by at least 60 to 80 up to 100,000, right? Somewhere in that range. So let's call it 80,000. It doesn't mean I'm going to panic. I got to sell this thing before I miss out. I got to unload this property. No, because I live here and I have a plan that I'm going to follow through, even if there's some pain, even there's some. It doesn't really affect me unless I was pulling money out. If I was going to refinance the property, if I needed to pull money out and do, whether it's a first mortgage or if I did a second or like a HELOC, then maybe that would affect the percentages of money I could pull out of the house. Or if the rates are higher, then I'm going to get hit with a higher rate, which means my payment's going to go up. But imagine, people that are buying houses right now at 7%. The houses that are at a little bit slightly decreased value in some areas, and they're paying a higher rate, and the rates probably maybe will go up another point or two, or maybe 3. I don't know. But if they're like, the money still works. If it's your primary residence, and you're like, I can afford this $500, $5,000, $2,000 mortgage, and whether you're renting a room or a family member or you and your spouse are paying for it, if you're like in a position where you're like, hey, the rates are higher, but this works for us, because otherwise we would be renting a property and paying the same or more, or maybe slightly less. I disagree with folks that say, oh, you shouldn't get a primary residence, it's a liability. I mean, I've owned, not hundreds of properties, but I've owned properties where I've always pulled equity out of every single house, and I had to pay somebody something anyway. I've been paying rent since I was a teenager, and I moved out of my house at a very early age. 19 is when I was pretty much completely on my own, right? I left when I was 15, and then went back home for a little while, and then back out at 18, 19 years old. And then came back for a little while at 25, and that's it. So I've had different highs and lows in my life, but I've always paid somebody rent. But it wasn't until my, I want to say, early 30s where I actually bought a single family, and then another one, and so on and so forth. So you're always paying somebody money, right, one way or the other. So you're not going to sell the property if the market goes bad, unless you have to, right? Any more than if you buy stocks that you plan to own, like Google, Amazon, Apple, Microsoft, Tesla. I mean, it's companies that you think have a future. Fill in the blank. But if you need that money, you got to get the money, then you might have to sell some shares. But the house that people buy right now, imagine 2 years from now or so, when the rates do come down, they can refinance it. They can refinance that 6, 7, 8% that they're able to afford. The property value will probably go back up, maybe not as drastically as it had over the COVID period, but it will go back from the, 3, 5, 10% drop that we might go through in this cycle. And then you would be able to have more equity in your home. And this is just my thinking out loud. And you'd also have a lower rate, which would lower your payment, would put more cash in your pocket. And you are going to have to rent anyway. I'm not encouraging you to go out and buy a house that you can't afford if you're doing that, but I'm just using the analogy of people are going to live somewhere. And this might be something that it was something I was thinking about if I was doing that. As I look at properties that I want to buy, for me, it's I'm looking at properties that I want to live in. I'm looking at properties that I can invest in, and whatever the rates are right now, and whatever I have to put down, if I know I could rent it and cover the expense, makes sense. I'm buying stocks like Tesla, and this was something I really wanted to show you. I don't want to make this too long, but I had taken some screenshots of Boeing, right? I think it's Boeing, BA. I took a screenshot of Adobe. I took a screenshot of what was the other one? There was a couple companies that I looked at that I thought were oversold that did play out over the course of weeks or months, and they did exactly what my thesis was, not because I'm right and I'm somebody to go to find out what stocks you should be investing in, but I just privately, quietly said, oh man, I like this. This seems like a great opportunity. I screenshotted it, and then I looked at it, from one date to the next, and it did exactly, or pretty close to what my prediction was of how it would play out. It just didn't go in the time frame that I thought. Sometimes it took a lot longer, but it did. But if you're not patient, just like if you buy a house, you might not make 3% or 5% or 10% or 20% in the property or in the stocks, whatever the investment is, in the time frame, in a short amount of time frame. But you're going to put the money somewhere. So as Tesla, for example, dipped below $200 as an example. Again, just an example. There's plenty of stocks and cryptocurrencies that you could look at. If Tesla dropped from Right now, I think it's 227 as I do this video. I checked it right before it started. It had gone up to 237. It went below 200 to 198. I mean, so there's a lot of volatility there. But I'm like, if I own 100 shares or 1,000 shares or 1,000,000 shares, which I don't. But if I had them, regardless of the cost, I sold some shares as that fluctuation went from 198 up to 210, 220, 230, and I've been taking profits and trading, buying back in, and dollar cost averaging the 100 shares. Like in Robinhood, I have 100 shares right now that on that $100,000 challenge that I have, and my dollar cost average keeps coming lower and lower, because regardless of the shares that I buy, if I buy 10 or 20 or 30 or 40 more, it brings my overall average down. If I sell those 10 or 20 or 30, I'm taking a little bit of profit, and then those 100 shares, the foundation, keep dropping lower and lower. I'd love to get it below 200. I'm not below 200. I think I'm at 228 or 9, and I would love to be as low as 185 to 200. I don't know if it'll go there, and that's back to my original sayings. Like, I don't know what the market is going to do. I don't. But as the market dips, if there is a hard recession coming and those stocks do keep declining, if I have the money available, I can just keep doing that. I am doing those strategies that I told you about, or I mentioned, where I sell puts, which means I'll buy the shares, 100 shares, if it drops to a certain price. And if it doesn't, I still keep the premium. If I already own the 100 shares of the company and I say I'll sell a covered call, meaning using Tesla as an example, if I can make $100 selling that stock and the spread is $2, then I make the $200 because it's every 1 point is $100, and plus I make the $100 in premium. Just again as an example, so that's $300 I'd make. If I sold them, great. If I don't sell them, great. Either way, I'm going to just keep dollar cost averaging my cost basis for the shares that I'm going to own, I want to own, and then I'm trying to make money on the side, whether it's a few bucks, a few hundred, or a few thousand every month, or every week, or as much as I can do. But I don't know where the market's going to go overall. But if I'm going to keep those shares anyway, what do you care? If your plan is 5 to 10 years or longer, your money is going somewhere. And if your money is going in a savings account, it's not doing anything but decreasing in value. Even if you're like, what does that mean? I used to say, what does that mean? If I have $10,000 in the bank and my savings account, it's worth $10,000. Yes, but the buying power isn't like it was 5, 10 years ago or 20 years ago. You know what I mean? You need more of those dollars to buy a cup of coffee, right? Like a cup of coffee used to be, 20 cents or something like that. Now you got to pay $3 for a cup, stuff like that. So your buying power doesn't increase. That's why you constantly have to make the money work for you. That's something I never understood. So I'm not a Wall Street investor. I'm not a bank hedge fund manager or anything like that. I have some friends that do this stuff, and I try to get some information. I don't want them to get in trouble, of ideas and practices, and that's how we learn if we want to learn. You don't have to. You can stay blind and deaf to everything going on, to say, no, this isn't happening, la 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 la, but it's going to happen, So that is what I was thinking about this morning as I was listening to different podcasts, and I was, kind of talking about the things that are about to happen. And I'm like, you know what? All I care about is having a nice Thanksgiving with the family. That my family is healthy, right, and safe as much as we can be, because there's a lot of bad things happening out there in the world. Look at what's happening in Ukraine, right? Like imagine that, what those poor people are going through, the pressure, right? Of being thrown. Imagine you're at your house and all of a sudden there's soldiers in the street killing people and bombs going. I mean, that's awful, right? So we don't have to worry about that here. In the United States, we haven't had that happen. So I mean, I'm very grateful and thankful for those things. That's to me what Thanksgiving is. And whatever happens, if the market goes down another 10, 20%, I am gonna, in the meantime, live at this house, whatever this house is for you, this apartment, this condo. duplex or townhouse or multifamily or wherever you are, you're going to live somewhere, and you're going to most likely have to pay a rent or a mortgage, or even if it's covered, there's still somebody with their hand out, the bank, saying, okay, you still owe us this money. Even if it's covered and you're making money, you still have an obligation, whether it's a liability or an asset. So as long as if you have a place to stay over the next 1 to 2 years, just like a bear hibernates or a squirrel, right? Like we're going through winter right now. In fact, when I get out of this car, I'm going to go blow more leaves and rake more leaves, and there's probably more coming. It looks like it's not done yet, but I'll do it quick. They're almost done, right? All the trees are starting to get bare, but not quite done yet. So there's more work ahead for me, and I'm prepared for that. Like I'm ready to go do that. It's just like if I know we're going to go through some tough times financial, I'm preparing for that, because that's what it seems like. That I'm like, okay, I got to make sure I'm living somewhere, regardless of what my house is worth, regardless of what my properties are worth, as long as I can cover those expenses. As long as I have income coming in, whatever that revenue stream is, whether it's an earned income job, a W-2 you go to every day, every week, every month, whether you love your job, like it, or hate it, you probably need that income. And then if there's other things generating money, like real estate properties or dividends or businesses, my sister-in-law has a online business that generates money for her. I have another friend of mine who sells online courses that like Skillshare type stuff, where people pay. And whatever way you're generating money, then as long as there's some money coming in, if you have a product or service that will continue to put money in your pocket for you and your family, and you're safe and healthy, right? Be thankful for that. And however this longs, if we're not in a prosperity time, you just like the bear hibernating, they know that the winter is coming. So I don't know. That's my thought for the day. And I hope you guys have a good Wednesday, whatever you're doing. And I'll see you guys next video. See you later.